Feroze, welcome on board once again. I just want to start off with a hygiene question. Now, a lot of people who do not follow financial news, do not follow what developments take place at the RBI. Just for the benefit of those viewers, if you could help us understand how the rate cut and any change in the rates impacts consumers and viewers and people out there.
Yes, I think quite a few from the population, the viewers, some of them would actually not be tracking interest rates so closely. Any interest rate movement has impact on our lives because interest rate is an integral part of a banking system, and we are beneficiaries sometimes we are paying interest on a certain amount of borrowing. So point one, interest rates is one of the most important variables in the financial services world because it has impact on everybody. Point two, if you're a lender to a bank in the form of fixed deposit, a fall in interest rate implies that whenever you actually renew your fixed deposit, the rate you would be offered is going to be lower than the last time you actually made a fixed deposit. So for a person who is a fixed deposit maker or a person who's lending to a bank, a fall in interest rate is a bad news. Point three is if you're a borrower, which quite a few of us are, in the form of a personal loan, in the form of a home loan, in the form of a credit card, all these loans directly or indirectly get impacted. And if you're a borrower, a fall in interest rate is a good news, and you will get a better rate than the last time you got for the same product. The fourth thing is if you are a home loan, if you have a home loan, then the rate cut will actually get transmitted over a period of time. Now that the banks are supposed to operate on something called the MCLR, which is a lending rate, so that's going to have some degree of transmission. So these are the 4 points when it comes to your question, actually, which a person needs to keep in mind irrespective of his or her understanding of the interest rate cycles.
First up is an email from Shruti Ji. She says, I have a home loan of 20 lakh rupees and I'm paying an interest of 8.65%. She wants to know now, after this development has taken place with respect to RBI hiking, RBI slashing the interest rate by 25 basis points, she wants to know if her EMI will come down. Feroze, it is in relation to what you were talking about before we went into break. Would you like to elaborate for the viewers' benefit?
Yes, Shruti, I think your EMI would not come down to the extent of the rate cut because they operate on the marginal cost of lending rate, marginal cost of funds, which the bank has. So what does that mean is that since the rate has been reduced by RBI, their deposit rates have not come down as much as 25 bips. So the reduction, to answer your pointed question, Shruti, your reduction in interest rates is not going to be equal to 0.25%. It's going to be lower because the cost of funds don't come down as much as 0.25 for the bank. Point two is whenever you borrow from a bank, there is something called a base rate, which is now called the MCLR rate, beyond which you pay an extra margin. That margin, little do people know that it is negotiable. So if I am paying MCLR plus 1%, go speak to your bank and say MCLR plus 1% is too much to pay, and most people are paying a reasonably higher margin over MCLR, and that's a negotiable spread. And that can be negotiated easily by 25-30 bips. That is not always given by the banker as the best rate. So you should negotiate that. Your loan is not too large, 20 lakh rupees. I think your banker could oblige, negotiate the rate, which is MCLR plus the differential. The differential is negotiable, Shruti.